Welcome back. Happy New Year. I hope everyone took some time, get away from the charts, spend time with family and recharge. It's a new year, new opportunities. And today we got a stock market update. So let's get right to it. I remade my bull and bear case, and these are short term, the bearish case, and then the long term bull case. Always long term, things are going up if you zoom out long enough. And the bear case, short term, these are just things we're looking at. Doesn't mean I'm bearish in the short term, but these are things we need to be aware of. So interest rates, I still have these as green. Inflation, still green until we see otherwise. The commercial real estate, still orange. We'll have to see how that goes. And then recession watch. Now, I put this on here because I think this is going to be here for the rest of the year. I'm not calling for a recession, but it wouldn't surprise me if at some point this year we do run into a little bit of a slowdown. I don't foresee anything crazy. And if there was a recession, that's when the Fed will cut interest rates and there'll be more stimulus, whatever. They're going to pump the market back up when they feel enough pain. So we'll talk a little bit more about the bear case short term because you'll see the charts don't look the best. But real quick, let's go over the bull case in the long term. These are the things I see. AI and cloud computing growth. Things are going to get a lot cheaper and easier for all businesses. I listened to the All In podcast and they were making the comparison to AI to refrigeration, where refrigeration is a technology that came along and it enabled other businesses to build on top of that. So you didn't want to necessarily invest in AI itself or refrigeration itself, because who are you going to buy? Coolers? Back then, what was the what were you going to buy? But you want to invest in the companies that use refrigeration and create businesses out of that. And Coca-Cola is the example that they use, where once refrigeration was established, then a company said, hey, I'm going to take this soda that we used to have to make right there on the spot. I'm going to be able to bottle it and keep it cold so it doesn't spoil through refrigeration, and then mass market that and sell it everywhere. So start thinking, what are the companies that are going to use AI and create the next Coca-Cola? Who's going to use this technology and be able to monetize it and make a boatload of cash? So the cloud, everything's going online. That's why I like Amazon and Microsoft, these companies, and the chips, because they're all part of this ecosystem. So cloud computing, everything's going online. Going to have to run the AI computers, and that's going to be done in the Starlink, in the cloud, in the data center, wherever. The Web3 creator economy, if you look at people like Mr. Beast, all these influencers, this type of stuff, drop shipping, I just think there's going to be a lot more of this to come. I think it'll come in waves where it really peaks and then cools off and then comes back and then cools off. But I think there's a lot of stuff that's going to come out of this. We saw on what was that, a football game where they had, Amazon was broadcasting, scan the QR code. Here's your favorite influencer trying out this product. They get paid for that. So just a lot of stuff going on in that world. I think we're still in the very early stages there, and there's going to be more to come there. Electrification of the world. I think everything is going to go electric. That makes sense. Now, I'm not a green freak, but I like to use this analogy. If you needed to heat up a thing of water, how would you do it? Most people that I know have the electric kettle, and they wouldn't grab a kettle and put it on the stove, wait for it to heat up. You can instantly, boom, get hot water in one of those electric kettles. After having a Tesla for almost a year, I mean, it's unbelievable the difference. So even buying a golf cart over the last few years, I mean, the electrification, it just, everything about it is newer, it's improved, and it's better. So I think we're going to see more things go electric. And That's going to take a lot of chips, that's going to take a lot of copper, and that's going to cause a lot of our infrastructure to turn over. So that's good. It means jobs, means replacing things, building things. And also I like to use this analogy. How many freaking things do you have plugged into your wall? If you were to rewind time and go back to 10 years, 20 years, you'd have 1 or 2 things in a plug. Every plug I look at has something plugged in, and half of them have power strips to add more things. So that's why I'm bullish on solar, because we're going to need more electricity. How are we going to get this electricity? Well, there's a big nuclear reaction in the sky every morning that wakes up and gives us vitamin D and energy that we can harness and use for our microphones and our computers and all our gadgets. So those are parts of the bull case. And there's other things I'm leaving out, but that's all I want to touch on today. So there we are, bull and bear case. Let's take a look at the charts. Not a whole lot to talk about. We've got an ugly start to the year, which is, in my opinion, great, because we need to cool off a little bit. And I like to buy things cheap. I don't like to buy things when they're just going up and up and up and up. I want opportunities to buy assets cheap. So here we are. Here's the Qs. Here's the S&P. Here's the SMH. They all look pretty similar. So this looks like something to me that probably has more to the downside to do. So that's where we'll talk about just in a second here. I'm not, flooding in, let's go buy the dip. I did buy a little bit SMH, like just a tiny bit. This is going to be something I'll make a video about down the road. I'm just going to buy a little bit every single month into one of my retirement accounts, no matter what the price is. So it could be $300, it could be $100, because this is a long-term play for me. So we did have interest rates here. Again, this was our huge climb down from 5%, and we're starting to see a little bit of a push back up. I think we did hit 4%. We did today. Wow, I didn't see that. So we hit and then fell right back down. So that's interesting. So I'm keeping an eye on interest rates. I expect this first half of the year, and I'm no genius, I don't have a crystal ball, I would expect there to be multiple interest rates, inflation scares, where, the Fed may not be done. Here goes rates, here goes this, here we go, market sell-off. I think there's going to be a lot of shakiness, a lot of volatility, which is fine. But I do expect companies' earnings to be good. I do expect the second half of the year to be strong, but it would be wonderful if we could have 6 months of choppiness, 6 months of pain, and that gives us time to build bigger positions in our favorite ETFs, stocks, etc., etc. Oh, and I hope you like my new setup. Behind me, I put on a nice aquarium theme for you guys today. So anyways, as we're going to get into right now, opportunities. I like my semiconductors. ETFs, I'm going to go over some ETFs that I would like to buy. I do like cybersecurity because everything's going in the cloud, everything's online. I think there's going to be a need for more cybersecurity. So I'm looking at an ETF there. I like the Qs. I like SMH. Those are ETFs that I personally own. I would look at a small cap ETF here if I don't find individual small caps that I like. So ETFs, know what you own. Know what's in those ETFs. Know how they're weighted. How often do they rebalance? Because ETFs are great because they take a basket of stocks, and if one stock sucks, they take that out and they sell the losers and add to the winners and rotate things around, so you don't have to do that. So that's great, but know what you own. REITs, know what you own. I like Vici, and I'm looking hard at Digital Realty. Believe that's what it's called. Ticker symbol O. Haven't pulled the trigger. If we get some nice volatility, I may look to purchase those because they pay nice dividends. And with interest rates most likely continuing to drop, you can get a bond-like return in an equity. Small caps. Know what you own here. So with interest rates starting to decline and liquidity starting to loosen up. So all of the last year and a half, or from the top of the market, when the market crashed, that was because the Fed was sucking liquidity out. It was harder to find dollars. It's starting to get easier to find dollars. They're not pumping money necessarily back in, but they're strangling the liquidity less. I hope that makes sense. So if you have a faucet, it's not fully on. They just, instead of keeping it shut, a little drop, it's starting to open up. That was a terrible example, but I hope you get the point. And small caps are going to benefit from that. The problem I have with small caps, I've scanned through the whole Russell 2000. It's a bunch of garbage. There's good stuff in there, but you got to know what you own here, because there's a lot of Bitcoin miners. There's a lot of stocks that just dilute the hell out of you. A lot of biotech, and I'm not knocking these, but you need to know why do I own this? Why do I own this company that keeps issuing shares every time there's a pop and I just keep getting diluted? So that would be more of a tactical trade, unless there's companies like a Chewy. I like Chewy, the company, and I'm looking at it. I'm like, that could be a decent swing, maybe even a long-term candidate. If I do more research on it, I believe they're a small cap. So know what you own there. An ETF's not a bad way to play it. The Magnificent Seven. Buy those on a dip. That's an opportunity in my opinion. But we need a little bit more of a dip for me to get really excited. So I have down here, be ready for Chop City Q1, Q2. Again, I don't know. We could just dump. We could just rip. I have no clue, but I expect there to be, oh, the Fed's not done. Oh, they're not going to cut. Oh, they're going to hold. There's going to be all this crap, all this volatility, and the media will spew some narrative. I think what really needs to happen is the market needs to digest the crazy gains we just had. And because of that, we're going to go sideways. I don't expect a big drop down, but I do expect a correction in time. We can have a correction in price. We can also chop sideways and have a correction in time. And then we move on to the next move up. So we also have earnings coming up. So it's going to be super interesting to see how some of these companies that were struggling and starting to come out, like an Enphase, how are they doing? How's Tesla doing? How's Apple doing? How are the real estate companies doing? So just be ready for a lot of volatility. I personally have, I would say around 20%, 20 to 40% cash. It's the new year. I did fund my Roth. I'm going to have a Roth video coming out, so be ready for that. But I'm looking for opportunities, and I'm being real patient. So the things that I'm buying right now, nothing large. I'm waiting for larger dips, and I'm also really, the market's been moving pretty aggressive here these last few days. So I'm just kind of waiting for things to settle down, and right now I'm looking. Do I want some Palantir? Do I want some PayPal? Do I want some Meta? Where do I want to buy something, and at what price? And why at that price? Why do I like Google at 125? Why do I like PayPal at 55? I'm actually going to delete all these because I don't have a lot of conviction right now because I've taken a little bit of time off. So the things that I am buying now, I bought a little NVDA today. Now it's expensive, but I like the company long term. This is a long term. These are long term buys. I don't care if these get cut by 50% because I'm going to buy a ton more. That's what I want. So I bought a little bit of NVIDIA just to have it in my account so I could see it every day. So this is a long-term hold. The SMH, I'll buy that every month. And Tesla, I'm looking if we can get a bigger drop. Tesla had delivery numbers, killed it. What a great year for them with all the headwinds. So watch list, I will come up with a watch list over this next week. And I will release that because there are some things I would like to purchase. But I need to determine at what price and why. So other than that, the TLT trade, nothing to go over there. It's a longer video. If you're watching to the end, I'm not a financial advisor yet. Maybe in a few months, stay tuned. I'll have an update. So do your own research. There'll be a disclaimer down below. Check it out. Be an adult, make your own decisions. And until next time. Peace out, everybody.